welcome to the Global View on this Wednesday. I'm Andrew Gagan. Great to have you with us here at AusBiz. Let's take a look at first what happened overnight. A positive session on global equity markets while the US dollar rebounded. A flurry of executive orders from President Donald Trump led to some volatile market moves, with some relief that he did not impose widespread tariffs. Wall Street's main indices rose, with both the Dow and the small cap Russell 2000 touching 1 month highs. Tech stocks fell. Apple leading the slide there after a broker Jefferies cut its rating to underperform. Shares of Tesla also fell alongside other electric vehicle makers as Trump ordered his administration to consider removing subsidies for EVs. And the president has also announced private sector investment of up to $500 billion to fund artificial intelligence infrastructure. OpenAI, SoftBank and Oracle plan a joint venture called Stargate. Donald Trump says the project will begin immediately to build infrastructure and will create 100,000 new jobs. Oracle shares rose on the report, while Nvidia, ARM Holdings and Dell shares also rose. Elsewhere, 3M was up after posting upbeat fourth quarter profits. Walgreens fell heavily after the Justice Department accused it of filling unlawful prescriptions for addictive painkillers. And Moderna gained after securing $590 million from the US to hasten development of its bird flu vaccine. Now, amid the raft of executive orders President Trump has already signed off on, the global focus has been on his trade policy, saying that he's thinking about imposing 25% tariffs on imports from Canada and Mexico as soon as February 1st, while also wanting to reverse the US trade deficit with the European Union. Meanwhile, the latest data shows the Philadelphia Fed's non-manufacturing survey fell negatively there, 9.1 to 9.1, I should say, in negative. And the yield on the US 10-year Treasury note fell around 5 basis points to 4.56%. The short end of the curve, the 2-year, was around 4.27. And the US dollar has been volatile as markets contemplate the uncertainty of tariffs President Trump may implement, with the Canadian dollar and Mexican peso under the greatest pressure. The Aussie dollar little changed at 62.7 US cents. And Bitcoin has strengthened, trading to be around 106,000 US dollars. Commodities, they're mixed. Oil prices have fallen after President Trump declared a national energy emergency, raising concerns of high US output in a market expected to be in surplus this year. Brent crude futures falling more than 1% to $79 a barrel. Copper off more than 0.5%. Iron ore little changed at 104 US dollars a tonne. And the gold price has surged up around 1.25% to $2,741 an ounce, to a more than 2-month peak as investors seek the safe haven asset amid uncertainty regarding Trump's policies. So let's get across those market moves, particularly in reaction to what we're hearing from Donald Trump. Howard Silverblatt joining us from S&P Global. Howard, great to catch up with you. Thanks for joining us here again at AusBiz. So certainly a lot of movement there, policies announced and executive orders from Donald Trump. That was expected. How are you seeing the market react to this?
The market's been very calm. We opened up slightly up this morning, about 0.3 of a point. We traded through there. There were no real buy and reallocation strong moves. In the afternoon, actually picked up and held it up about 0.9% for the day. It was definitely a good trading session. There was no scares in there. There was no massive reallocations or movements on there. And it wasn't the Magnificent Seven that did it. They were actually just about a break even today, especially since, as you said, Apple is down so much. It was broad and it was along most sectors outside of energy. Again, drill, baby, drill, as Mr. Trump is putting it, may be good for consumers and lower the price of oil as well as the cost to consumers, but it may not enhance a lot of energy issues. So their profitability. So energy was the only sector down today, but the trading definitely was good on what we had. We didn't get anything we didn't expect. And about a half hour ago, as you had mentioned, Trump did hold a conference, and we've got $500 billion coming in over the next 4 years, $100 billion already committed to making AI in the U.S. So that will add jobs. And again, those are tech jobs, and that will You have to start with construction, energy, additional, because they use a lot of energy on those plants, and it'll just move into the economy. So it's a good opening trade day. But tariffs were not addressed yesterday. They were indicated, but they did not. That's going to be the major one.
Well, Howard, you made the point there. The focus is on the consumer as the key to both the economy and therefore the markets. Why is that? What are we seeing?
Well, it's the consumer that still supports the economy. They're spending, and corporations just follow them and build products, make products that they're going to be able to spend on. And how they are, what they feel, what things cost, the trade-offs they make, they are going to make the decision on how good or bad the economy is, and therefore how good the market is, because the profits will show and the sales will show. So everything we're looking at, taxes, spending, interest rates, what the Fed does, all these investments, is how it impacts the consumers, because they in and of themselves have impact, but not as much as the consumer. So it's a consumer you need to keep an eye on what impacts them. If we get certain tariffs and certain things go up, they're going to shy away from those, and that's going to hurt them. And inflation will come back in if energy goes down and it reduces costs to them, even if it hurts some energy issues, that's going to help. So in the end run, it helps the economy. So again, it's the consumer that's spending the money directly and indirectly, and that's who controls the money. Government controls policy, but it's the consumer coming in and buying what they choose to buy.
Well, as we mentioned there, Trump having declared a national energy emergency has actually reversed Joe Biden's pause there on LNG exports.
A lot of things were reversed on his actions on the Thursday. But yeah, those LNGs were really important. Biden had a halt on any new permits, so the U.S. could not export. He has opened that up right now, and we are going to a massive IPO coming this Friday. We set its planned for a venture, an export of natural gas, and they're going to go public. $40 to $46, probably closer to the higher end of it. That's $100 billion company going in there because we had a reversal of what we can export. The U.S. is going to be exporting a lot more LNG, and that's going to help the prices of energy. Again, may not help all energy issues, but it should help consumers as well as the market itself. And that'll be an important IPO on Friday, hopefully Friday morning. I should add, given Trump's approach, as the people that he's put in there and the policies and the executive orders, M&A is going to be very hot this year. Anyone associated with it, whether it's through brokerage, through evaluations, or doing the deal itself, is going to have a very good year coming in. That's going to help the banks and the financials a lot as well.
Now, Howard, we're also obviously in the midst of fourth quarter earnings season. What have you noticed there in particular? We just had Netflix too drop after the bell.
Yeah, a nice increase on that when it beat on the subscribers. They're not going to be releasing subscriber numbers going forward, so have to see there. But we've got, as you can see, about 47 issues of the 500 in there. Next week we'll start heavy, but what we're seeing is positive numbers. The earnings are expected to set a brand new record. Okay, we're looking at about a 13% year over year, only up 3% from last quarter, but a new record for earnings in here. Sales are just about flat. We would expect sales so far has been positive, especially in the financials that have such a high beat rate. All 4 quarters next year, 2025, when we start reporting here, are expected to be a new record. IT is going to be hot, as well as the financials. Those are the leading industries in there. But so far, it is a very positive item. And those earnings, when we start to get more of them starting next week and start getting the bulk, they are going to control the trades, the individual issues. Policy, Trump, Congress, the Fed, they'll all control the higher news level. But when you start getting earnings on your issue, you're going to reallocate to them or dollar average in or out of them. So it's earnings is what's going to control the individual trades over the next 2 to 3 weeks, even though the top line is going to be the news from Washington.
Howard, great to get across what you're seeing there on Wall Street. Thanks so much for joining us on S&P Global.
Thank you. You have a good morning.
Let's take a look at what we can expect this morning when we get underway in a couple of minutes' time. SPI futures, they're up 0.3%, reflecting what we have seen on global markets overnight. Stay with us. We are very close to the open.